Atul, you've been very big on the demographic story as well, and you've also been tracking really how all of this is going to stack up to move markets higher. Give us your perspective, and also how, taking off from what Bala said, this is really going to be driven by the domestic story, and it's really going to be some of the old cyclical plays that are going to come back and really capitalize on that.
Thanks. So let's put things in perspective. As the markets stand, we talk about Nifty. It's a good index we all follow. It's at 18,100. About a year ago, we were at lifetime highs, which was 18,600. So essentially, the distance from lifetime high is 3%, which is pretty good. Why I say that is because if you look at, we know a lot happening in China. The Hong Kong market is 40% from lifetime highs, right? Tech, Nasdaq, absolute sweetheart. Everyone wanted to invest in a Nasdaq ETF. Everyone wanted US exposure. The Nasdaq in the last 1 year is 30% from lifetime highs. S&P 500, the top 500 US corporates, 20% from lifetime highs. So if you really go and see that among the top 20 to 25 global markets, the market nearest to lifetime highs, means showing relative strength, is actually India. So there is a method in the market, or as a belief system, that stocks that fall less in falling markets are leaders of the next bull market. I want you to reflect on it. It's a big takeaway. That the real test of markets, stocks, companies and industries are in difficult times. And those stocks, those industries that fall less in bear markets, actually when markets turn around, are leaders. And that is a characteristic India is showing. So the last 1 year has been a global bear market. I put out some numbers for you. But India is the markets that fallen the least. So in my 30 years that I've been in the markets, I have never seen this. And let me add on another negative point. That in this last 1 year, the total FII selling in this country has been $50 billion. So whenever FIIs used to sell, Indian markets used to tank. What's happened here? How come we've fallen so much less than global markets in spite of a $50 billion sell number by FIIs? What shifted? The shift is that there have been almost 40 billion that have come in from domestic flows. Every time over the last 30 years, I've been a broker, I've seen it at retail, institutional levels, whatever. Whenever markets tanked, Indian investors ran out of the door. FII bech raha hai, nikal jao, bhag jao. Markets are going to crash. But this is the first time that in fact we have seen positive flows. So now I want to think that, hey, what's happened here? Why aren't Indian investors panicking? How come they're adding on 40 billion? And we all talk of this demographic shift. We refer to it other industries, etc. But the biggest beneficiary of the demographic shift is happening in India, in Indian markets and Indian investment patterns. When I invested in the market, probably in my full family generation, I was the first guy who ever bought a stock. But today when I speak to my cousins, family, friends, even people with a salary of 10 to 15,000, they have a 1,000 rupee systematic investment plan going to mutual funds. So that is demographics and play. And if these habits come in when you are at 25, 30 years of age, the runway is the next 20 years. So the biggest beneficiary of demographic shifts is going to be this domestic flows. And we've seen this in the US. Between 1980 and 2000, the Dow was 1,000 in 1980. It got to 10,000. And what was the shift? Was this demographic play. I'll just end by a beautiful line my mentor told me, Rakesh Jhunjhunwala. Before he passed away, I was with him one day. And he says, Atul, sab पूछते हैं अपना time कब आएगा? Singh, beta, apna time aa gaya hai. That is the shift. That is the demographic shift. And that is why we are a market that's fallen less. We will be the first to break out to lifetime highs. And I feel that we are entering a decade of leadership backed by this big demographic shift propelled by domestic investors.